Good morning. I'm up bright and early today, 6:45 in the morning. And what day is it today? It's Tuesday. I think it's the 25th of January. Okay, we've been looking at the stock markets. Well, I have been focused on the stock markets for a good week or two in most of my videos, and it's all worked out rather well, isn't it? I'm hoping I've helped you make a lot of money. We were selling the stock markets ever since, well, even the S&P, for example, broke this support level. I was actually waiting for this support level to be tested because I didn't know for sure that the markets were going to collapse until that level was broken. Anyway, the market was very kind to me. We broke the level, and then the market returned to the resistance level, and of course the price plunged. I could actually move myself over this side, I think. There we go. Over I go, so that we can see the exact move. Now, I said to you in my videos and also in the reports that I wrote and posted in the commentary box, how I expected the E-mini S&P to drop to 4,200. My first target was 4,400. I expected a minimum drop of 200 points, and then my ultimate target was 4,200. Now, as you can see here yesterday, 4,212 was where we got to, so we missed my target by only 12 points. If you managed to bag nearly 400 points on that move, and I know some of my subscribers did, because on my live chat I was telling them around this sort of area to start thinking about taking a profit. It really has been a phenomenal move. In fact, one of my subscribers told me that he's just made his bonus for the whole year in this last week, so I couldn't be happier for him. It's not even the end of January yet. So yeah, it's been a bumper week, and I'm hoping that you've done something similar. In the Nasdaq, that was even better. So if you were following the reports in the Nasdaq, or if you were following my videos, let me just wait for this to load. That broke lower, and of course we plunged to where did we get as far as 13,700? If you were in my live chat group, then you would have known that that was my target. And of course, building something of a negative trend. Now, I spotted that we were building a negative trend around here. That was where I was talking about, look out, guys, this is building a negative trend. And then once we got back below the 100-day moving average, that looked negative. Then we broke the 200-day moving average, which also looked negative. On the weekly chart, let's just have a quick look. Nice to get a bigger perspective. So this is 2020. Of course, that's the move up from 2020. Sort of just after the COVID outbreak, I've taken the low there from 66.28. We went all the way up to 16,700. I mean, that's absolutely phenomenal for the Nasdaq. And of course, we've now retraced a fair old chunk of that, more than 23%, less than 38%. So somewhere in the middle there. What's that? Well, around 30% we have retraced already for the Nasdaq. So the question now is, where do we go? Do we go up? Is that bounce yesterday indicative of the end of the crash? We will look at the Dow Jones. These are the three markets that I track. Again, a big move to the downside. We did have this channel with this lower trend line here, upper trend line here. Once that was broken, market plunged, and that is now resistance, of course, and we seem to be dipping. Right. I'm now going to actually move on from the stock markets. Of course, there is a lot going on. I've got a lot to talk about, but I do like to mix it up a bit and look at some of the other markets, because I do cover 24 markets a day, Forex, commodities, stock markets in Europe and in America, and I also cover crypto. Now, on that note, just a quick recap for you. From the 10th of Jan, I've been talking about the stock markets going down, so I gave you plenty of warning. This is one of the videos. I'm going to put these links in the box below, just in case you want to go over them and see exactly my methods, how I figured out that the stock markets were going to go lower, what my signals were, where the break points were. If you want to try and study what I do, learn for yourself, and maybe you can figure it out next time when it's coming. Again, this one was on the 19th of Jan, and I warned that the outlook was increasingly negative for stocks. We were just starting to break lower, so you can, again, study this video. You can see exactly my methods. They're pretty simple. I'm sure you can learn them yourself. And also, I had put the commentary, the written commentary of all the levels, the break points and everything in the commentary box below, so you can study that as well. That was on the 19th of January. Again, I'll put that link below. This was on the 21st of January, so just at the end of last week. We were just starting to accelerate to the downside. I said the stock market crash had happened as predicted. We actually sold the high of the day on the Friday to maximize our profits, even if you were not already in a short position. And again, I've got all the commentary below. Now, you can get these reports if you want them on a daily basis. I've actually got information down there at the bottom. I'm going to show you my webpage in just 1 minute. This was the last one. This was yesterday. Yeah, 24th of Jan. Now, I published this one early in the morning. So again, you still had a chance to literally sell the high of the day before the market collapsed yesterday. So even if you hadn't got on any of the short positions from the videos before, all you had to do is tune in yesterday morning and you would have bagged many hundreds of points yesterday. In fact, look, I've got some great comments here. People bagging 694 pips just on the video. So I hope you did something similar. And if you did, then and you want to keep following the stock markets because there is certainly going to be a lot of action going forward. Really got to take advantage of this volatility while it's there. These stock markets have not had this volatility for such a long period of time, and I do think it will continue. Go to my website, daytradeideas.co.uk. There's all sorts of markets available for you to subscribe to. They're all for around 50 quid a month. But if you want to have the live signals on my Telegram channel, then you've got the choice of the premium membership as well. If you just want the stock markets, if you've got into the stock markets now, following my videos and watching my reading my reports that I posted below, you can get the exact same analysis either on the American markets or the European markets. 50 quid a month. It's nothing, is it? If you didn't make that this week following me, then, well, I'm sure you did. Right. Crypto is where I'm going today. I'm going to have a look at the crypto markets. So let's go back to my charts. Okay, let's crack on with Bitcoin. Now, I've been calling Bitcoin down for a long time, and if you've been following those videos, again, go back to my YouTube channel and just look over the last couple of weeks. I've been calling the crypto markets down for quite a significant period of time. In fact, I actually spotted the high for crypto here. It was relatively simple to spot it. Once we had beaten the previous all-time high, which was around 67,000, we pushed up. And on the first day, it all looked very good. We got to 68,550. Next day, all looked good. We got to 68,999. But this is when the worries set in. Bearish engulfing candle. We should not have had a bearish engulfing candle if the market was going to continue to push higher. So that was when I started warning people, this doesn't look good. This is not the signal that you want if you're holding a long position. We went sideways for a while, which kind of confused me actually, because normally after bearish engulfing candle, you'll get another quite big red candle to confirm it. So I was slightly unsure here, but of course we never got anywhere near the all-time high. So there's no way that a short position could have got stopped out. Then, of course, we plunged to the 38.2% fib, coupled with the 100-day moving average, and we bounced off there. You would expect that on the first test of a good support level, but the bounce was not particularly strong, and I'm pretty sure that if I did some short-term fib levels, that would prove to be something significant. Anyway, as I feared, we broke the 100-day moving average and that 38.2% fib support eventually, and the market then plunged, actually breaking the 200-day moving average. We fell so quickly, but then we hovered around it and, of course, eventually broke lower. Again, 500-day moving average did a great job, and then we broke lower. So what next? Now, I don't particularly see why this market... Oh, yes, I do, actually. I do exactly know why. Now, let me show you. Oop. Okay, here we go. The weekly chart has shown, now this actually could be a head and shoulders pattern, and if it is a head and shoulders pattern, we're going to 20,000, but we'll worry about that another day. Right now, we have found support around the 100-week moving average, which I did write in yesterday's report. If you are a subscriber, now we've bounced ahead of it, about 1,000 points ahead of it actually. We have something of a doji perhaps forming on the weekly chart, so this really is crucial now. I'm not going to give you my opinion particularly on whether that will hold forever. It might do. We do have a pretty bullish candle here in Bitcoin. So if you're a Bitcoin bull or you have been buying on the way down, this is your big hope that the weekly chart, on the weekly chart, we hold the 100-week moving average. Again, bullish. It's a bullish engulfing candle. We probed to the downside. The buyers jumped in early. We've got a nice blue body to that candle. We're not seeing any follow through yet, but that's no need to panic. We do definitely need to get through 37,800. And if we can do that, we can test the 500-day moving average, which is around just above 40,000. And we've also got the 23.6% fib at around 41,500. That's going to be your resistance area. It's pretty obvious. Moving average, fib, and we've also got some clear consolidation down here, and even a swing low not far above it at 42,000. So that for me now is the crucial level. It should be a strong resistance level, and of course if we don't get through it, then we're going to probably retest that 100-week moving average, and if we do push up through 45,000, then I'm going to certainly feel a lot more positive. I can put a trend line in here as well, just to really polish it off. There you go, that trend line coinciding perfectly with that level I was talking about, so there is all sorts of resistance there. Now Ripple has not looked as strong as Bitcoin for quite a long time, definitely doing the sellers are coming in at the resistance levels quite aggressively. We broke the 500-day moving average and absolutely plunged. And then when we look at the weekly chart, it doesn't look well. We've overrun the 100-week moving average. Not a big problem because last week we closed above it. So the question is, do we close above the 100-week moving average this week? The blue line, I guess that's all I can really say. I can actually take these fibs off. They're out of date now. Going back to the daily chart, I don't know. I just don't feel that this is quite as positive. And you're probably thinking, well, why not? Because we've actually tested the 100-week moving average and held it. But just something doesn't feel right about it. We didn't get quite the bullish engulfing candle in Ripple, but we will need to get through the 23.6% fib here, which is around 65.80. The big resistance is sort of the low 70 area, 72.50, 74.50. I'll finish off with Ethereum. We have been down to the 500-day moving average, as you can see, the green line. A big recovery from there. The market actually closed unchanged on the day. So not a bullish engulfing candle, more of a sort of doji, gravestone doji. But it does show that we tested that level and held it. So all is well for the bulls for now, at least. We're not massively oversold. Doesn't look so good on the weekly chart. We broke the 50% fib. We don't seem to be holding that trend line, so the longer term charts don't look so good. But hey, let's just keep our fingers crossed for the short term charts, which are showing us holding the 500-day moving average. If I just scrunch that up a bit, get a bit of a better perspective. Yeah, you know, there is some price action down there. It really is just all about the 500-day moving average. We have not had a daily close below there. 22.86 is the exact value for that. We start breaking below 22.50 and holding below there and closing below there. And obviously a break below yesterday's low at 21.57 is going to be a problem. It's all based on that. I know that some of you are watching will be long-term crypto bulls and be thinking this is a fabulous buying opportunity. Pretty much we are at that level. So if these levels hold, yeah, we can still say that we're in a bull market. If they don't, I would be seriously concerned about very significant losses, and I wonder if the stock markets will have some sort of bearing on that. Okay, I hope that's all been very helpful. Please do send me your comments. I've been getting more and more comments, and I do appreciate them, and I do like answering them. Do me a favor, please subscribe, please like, please share. It really does help me out. Okay, we'll chat again tomorrow.